So the rand firmed in early trade, boosted by strong commodity prices and confidence in the local economy. The local currency ignored the expected United States inflation data that could lend support to the Federal Reserve's aggressive policy stance. Shares on the Johannesburg Stock Exchange, on the other hand, slipped further into the red for a second consecutive day. For analysis on the latest market moves, we're joined this afternoon by Michael Treherne, Portfolio Manager at Vestact. Good to have you on the program as always, Michael. So talk us through first some of the factors that are driving the local index down and the rand higher.
Yeah, afternoon, Tembekile. As you mentioned, US inflation data that was out yesterday, that's at over a 30-year high. It's spooking global markets a bit, and it seems that the JSE is just following suit. High inflation generally leads to lower product demand, and probably more worrying for stock markets is it brings higher interest rates, and that's what we're seeing that worry come through. As I look at it now, JSE all share down 0.8%.
You've also got today gold prices which have edged higher, while oil has slipped in early trade. What is driving that sentiment, especially in the commodity space?
It seems macro trends. Gold again is on inflation worries. Generally gold does better around times of higher inflation. Looking at the gold price, at the oil price, China's Shanghai lockdown has reduced the amount of demand for oil quite significantly over the last few weeks, and we're seeing remnants of that coming through. It is worth noting that the oil price has started to tick higher again, so still around that $100 a barrel mark, but not as high as we've seen it in the last few weeks.
There's also a lot of data to look at as far as ZETA Investments, who've now announced their results and a special dividend. Break it down for us.
Yes, so ZETA is an agricultural investment company. Their management have said that they've worked very hard over the last 2 years to unlock value for shareholders. And what they've done here is they've sold a logistics company for 1.6 billion, and they're now paying the proceeds from that sale out to shareholders in a special dividend. The share price reacted very nicely to the news, up 7% today. Management say they're going to work hard to continue to unlock value for shareholders and sell assets where need be, and buy undervalued assets elsewhere if they find them.
ArcelorMittal then, South Africa, says it's going to now develop 2 100 megawatts renewable energy projects for Gauteng and the Western Cape. How will those work?
Yes, so that's been prompted by legislation changes where they're now allowed to build self-generating power stations of that magnitude. They've said that part of the rationale is renewable energy is obviously less reliant on Eskom, which again load shedding this week is a highlight of that. ArcelorMittal is South Africa's biggest user of electricity, so it makes sense for them to diversify away from Eskom where possible. And then there's also greenhouse gas emissions concerns. If they can go renewable, that's good news. They're going to do a study over the next 2 years and hopefully start construction towards the end of 2024, where in 2025 they hope to see the first bits of electricity coming through, depending on that study.